Hello, good morning, everyone. How are you doing today? Let's confirm we're all on the same page. Kindly confirm that you can see my screen and you can hear my voice clearly by typing hi in the comment section so that we can get the session started. So I want to make sure we're all on the same page on this one. And oh, great. Good morning. Um, Carrie, good morning. How are you doing? Hey, Ashitaka, good morning. Thanks for that confirmation. Steamroller, how are you doing? Great, 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 great. So let's get this session started. First of all, I want to welcome you all to yet another promising session of Extreme Speed Life, hosted by my humble self, Sharif Daramola. As usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us this New York session today. In addition to that, we will also look at the pairs we deliberated on yesterday. We want to see how well these pairs are doing, and if there are any commentaries, advices, and if there are any plans that we need to make against the New York session today, I will be sharing with you during the course of the session. So I'll advise you to stay tuned into through the session to the end of the session so that you don't miss out on any of these ideas we will be sharing herein. So without further ado, let's dive into the charts and let's see what's happening. And also, I forgot to mention that if you have any pair you want us to look at or any commodity you want us to look at, feel free to drop it in the comment section and I will try as much as possible to inculcate into our schedule for today. So moving on, we have the US oil that we want to be looking at. Okay, let me see. I think I have some comments. All right. All right. Great day. Thank you, Carrie. Ashitaka. All right. We shall look at silver as well. Okay. So let's look at what happened on the US oil. Obviously, price action moved as expected on the US oil as we were able to close in with a minimum of about 430 pips in profit on the US oil. I remember we were around this point yesterday when we were deliberating on how to take advantage of this move. I shared with you a scenario here right below this $87.80 area where we saw the sharp rejection happen, and I stated that a reversal structure on lower time frame or multiple rejection of this level should give us a confirmation to join the decline to the downside. And if we look at the lower time frame here, we can see how multiple rejection happened here. We saw the diminishing potential of any bullish opportunity at this point as the candle here didn't close right above this engulfing candle to give us that signal that price action is going to the downside. And we have price run through, break through the $85 key level area, which we identified on the daily time frame. I will be showing you how that was in a moment. Then we saw price move down. Even what we saw here was a breakdown of the bearish trend line we identified on the 4 hours time frame. So let's scale up to the daily time frame. Let's see how we got to this point and what was our view. And this also will help those who are not part of the session since the beginning of the week. So let's dive into the daily time frame and let's see what is happening on the daily time frame. Well, on the daily time frame, it's obvious that price action has been on a very strong bullish momentum since the beginning of the year, and we were able to identify a bullish trend line after connecting the series of higher lows. Now, if you look at the structure we have here in the last couple of weeks, that is right around this point, we can see how price has consistently rejected that level, giving us a possible bullish momentum from that point. And remember, we have a key level also identified at the $85 area. We can see we had one here. We had multiple rejection by sellers during the course of the late last year. I think October stroke November last year. We saw our participants rejected that area, turning that area into a selling niche that pushed price right back into the bullish trend line we identified. Then we saw a breakout of that level, retest that pushed price to the upside. Now we saw price come back into that area during the month of August, and since the month of August we have seen a consolidation phase right around this area. Now a new development has happened based on what happened during the last 24 hours here, as we can see a significant breakdown of the $85 level, which has held price action in the past. And if we look at the nature of this $85 mark, we can see how this level has been a major determinant of price action in the past, and right now we have a breakdown of that structure after multiple rejection where buyers were trying to move price to the upside from here, but it appears the sellers finally won that tussle, and we saw the breakdown of the $85 mark during the course of yesterday's trading session. So now going into the New York session today, how do we intend to take advantage of any potential opportunity lining up for us here? So now that we have this breakdown of the structure, remember we had the breakdown of that bullish trend line, we saw multiple rejection of this level with the hopes that price will continue to the upside, but lo and behold, during the course of yesterday's trading session, we saw an outright breakdown of this level. So right now, how far is this bearish momentum going to go before we see an intention that price wants to give us a confirmation, probably in the form of a retest of the structure or this bullish trend line, to send price going further to the downside? So this is what we want to be looking forward to today, this morning. And so in order to do that, we need to scale down to a much lower time frame where we want to see things more clearly. So on the 4 hours time frame, what we observed on the 4 hours time frame, which I shared yesterday and the previous days on this one, was this bearish trend line we were able to identify that has been holding price action since the month of June, and we were able to connect the series of lower highs at this point to give us this bearish trend line that we were able to identify here. And we saw the breakout of structure, we saw a retest, and it appears price has broken down that bearish trend line one more time. So what we want to do now is to zoom into the structure and let's see what is happening around this area. So now if we zoom in, hold on a second, let's zoom into this bearish trend line here. I think at this point we need to delete this so that we can have a clear chart. Okay, so let's delete this one, delete this one, we delete this one too as well, we no longer need this, and this one too as well, we no longer need that. So right now, what have we seen here in the last 24 hours? We have seen a significant breakdown of that bearish trend line. In fact, we had the breakdown, retest of that structure, and price has continued to the downside from here. So going into the New York session today, how do we intend to take advantage of any potential opportunity here? Judging from the scenario we can see here on the 4 hours time frame. So what I want us to be looking at this point is to look at how this consolidation phase here is. Let's see what this consolidation phase wants to evolve into to determine where we want to be going during the New York session today. And remember, we're already in profit on the US oil, and we want to be patient enough to look out for further opportunities to take advantage of any momentum here. So what we want to be doing is to be patient enough to wait out for significant confirmation before we want to join any rally or decline on this one. So when we scale down to the 1 hour time frame, I think we'll be able to see things more clearly here on the 1 hour time frame. Now on the 1 hour time frame, hold on a second, let's see. So on the 1 hour time frame here, the first thing I want to be doing, as we can see, we saw this impulsive move to the downside from here, from around the $87 area. Price moved to this point, it moved to around the $81.50 area. Then it climbed up a little into the $83 level, and then we saw it appears price has broken the previous low here. So what I want to be doing here is to bring out my line chart. That's the first thing we want to be doing. Then let us identify the previous structure here. And if we look at what we have here, we have somewhere around the let me see, 87, it's $1.65, I guess. Let's see what that is. So we have a structure here and we have another structure at this point. So we have the structure here. So for the sake of clarity, let's label these areas. So we have here at the $83 mark. So we have the $83 level here. And then here we have the $81.80. Is it $81.70? Okay. So we have a channel here. We saw this impulsive move to the downside from this point here. Price rejected this level one time, two times, and then we saw price breakdown coming into the $81.70. Is it the $81? I think $81.50, I think. Then price came into the $83 level and we can see this move. So right now, what we are seeing here looks more, sorry, let me adjust this to $81.50. Okay. So what we are seeing after the impulsive move here is that it looks like price action wants to evolve into a channel. So it's likely we're seeing a bearish rectangular pattern here, which from a technical standpoint, we expect that price will break down this channel to give us a signal. And remember, we don't want to get too excited at the sight of the signal, as we want to wait for further confirmations to happen in the form of a retest of structure. And the retest of structure can come in the retest of this $81.50 level or somewhere around the $83 level, which you can see also shares a confluence with the bearish trend line we identified on the daily time frame. Sorry, on the 4 hours time frame. Remember, we identified this bearish trend line on the 4 hours time frame, and you can see that the $83 level here shares a confluence with that bearish trend line. So let's extend this out a little bit. Let's extend the bearish trend line to out a little bit. Hold on a second. I think I'll prefer to use the extended tool here. So okay, so we have this bearish trend line here. So if we have a breakdown of the $81.50 area during the New York session today, remember, we're not getting too excited. We're already profitable on this trade, so we don't have to be impulsive about taking a decision on this one. So if a breakdown happens, we want to be patient enough to wait for price action to come back into our structure to give us a confirmation that we are going bearish. And if the retest of structure does not happen, then definitely we'll just pass that trade. So what we are looking forward to right now is this: if we see a breakdown of structure like this and price comes back to do a retest of either the $81 or somewhere around between the $81.50 area and the $83 area, what we want to be looking out for is structures or patterns on lower time frame that support a trend continuation to the downside. And this pattern can either come in form of a double top structure or a head and shoulder pattern or a rising wedge. Whatever it is, we want to be taking advantage of that trend continuation to the downside if that happens. So this is one scenario we want to be looking forward to. Like I said, let me recap that again so that it can sink in. Like I said, we caught up, we need a channel between the $81.50 area and the $83 mark. What we want to be looking forward to right now is a breakdown of that $81.50 to give us a signal of a trend continuation to the downside. And if we sight this, we don't want to jump in right away. We don't want to get too excited. We want to wait for confirmations to happen, which is likely going to come in the form of a retest of the $81.50 area, or price come right within this area between the $81.50 area and the $83 area, which also shares a confluence with the bearish trend line we identified on the 4 hours time frame. Then we look out for patterns on lower time frame to join the decline. So we look out for patterns like this, then we join the decline to the downside from that point. So that's the first scenario we want to be looking forward to here. So if we see a breakdown of that channel, then we want to be thinking of say selling momentum at this point. Now, what happens if we see a break above of the $83 level? So this is what we want to be looking at again. So if we have a break above of the $83 level, as usual, whenever we see signals like this, we don't want to get too excited, remember, because we don't know what could actually happen. It could be a false one. So we want to wait for confirmations to happen, which is likely going to come in the form of a retest of the $83 mark area, after which we look out for patterns on lower time frame to join a counter trend opportunity. Remember, this is a counter trend opportunity. That is, if we see a breakout of the $83 level, it's definitely a counter trend opportunity. And if you are not someone who is comfortable taking a counter trend trade, I would suggest that you just hold on and wait for price action to give us a confirmation that is going bearish, because right now the scenario we're having on the US oil is very, very bearish. Now, if a breakout of a $3 level happen and a retest of that area happens, this is likely going to be a retracement of the previous impulse leg we have here. Remember, we had this impulsive move to the downside. So this is likely going to be a retracement of this impulse leg. So if you are a long-term trader and a breakout of a $3 level happens and a retest of that structure, you want to be waiting at a bus stop somewhere around here to take advantage of a trend continuation to the downside from that point. So like I said, if you are a short-term trader or a counter trend trader, you could take advantage of that move at the breakout of the $3 level right into somewhere around here to take advantage of a trend of to take advantage of that counter trend opportunity, which will be giving you around 400 pips. So now if we are going to be taking advantage of a bullish momentum right at the breakout of the $83 level, then what we want to be doing, hold on a second. I'm sorry for the break in transmission. I had to attend to some personal issues here, so I'm sorry. So let's continue with where we had. So what are we saying earlier? So like I said, this is an impulsive move to the downside, and a breakout retest of the $83 level is likely going to be a retracement move of that previous impulse leg. So like I said, if you are a counter trend trader or a short-term trader, you might likely want to be taking advantage of that counter trade opportunity. But for me, as a trader, I'm a long-term trader, I will want to wait for price action to come to either this area or probably this key level. Remember, we identified this key level on the higher time frame, the $85 mark, which has been a very, very strong level in the past, and also it has been a major determinant of price action in the past. You can see if I zoom out into the structure we have here since the beginning of the month of August, we can see our buying potential has been identified from the zone. You can see what happened at the zone area before we saw the breakdown of that structure. And from a technical perspective, whenever we sight a breakdown or breakout of a structure, we expect that price will come back to do a retest of that structure to give us further confirmation, probably multiple rejection here or a reversal pattern to send price crashing to the downside in this scenario. So what I'm saying here is, since we already identified that we are on a very strong long-term bearish momentum here, we could be waiting for price to come back into either the $85 level or the $88, $89 area to take advantage of a trend continuation. And one thing I also observe here is this: if we bring out our line chart on the 1 hour time frame here and duplicate this trend line, we can see that we have a similar structure around this area that we could take advantage of. And you see it's forming a channel. You can see how it's forming a channel here. So what we want to be looking forward to is this: we want to be looking for price action coming into it between the $85 area and the $88, $89 area to take advantage of a trend continuation to the downside. So to buttress what I've just explained here, let us take let's just identify the golden zone area, that is running our Fibonacci retracement tool through this impulsive move to the downside here. I'm not sure if this impulse leg has ended. Remember, we need to see the culmination of this impulse leg after the breakout of that reversal pattern. If we see an impulse leg like this, hold on a second. If we see an impulse leg like this and we see multiple rejection of certain area like this and price breaks out of that structure, then we know that the retracement phase, the impulse leg has ended. Then we can run our Fibonacci retracement tool to identify this. So for the sake of this video at this point, we never can tell this impulsive move could still extend to the downside. That is, price comes into somewhere around here. So I'm not sure before that retracement phase happens. So, but for the sake of this video, this is where we had at this point in time. So I will be using this area at around the $81.50 as the culmination of this retracement phase. Mind you, remember, I'm not saying the impulse leg has ended here. So if we are using this area at this point, so between the 50 and the 78.6% area should be our golden zone area. And let's draw a box within that area. So we have something like this. And then let's label this window for the sake of clarity. So we have a sell window right around this point. Let's give this a green color. And let's give the box a yellow. And then we have like this. So we have a sell window around this area. So when we see, like I was explaining earlier, that if a breakout of the $83 level happens, $83 level happens, I want to be seeing a breakout, retest of structure, and see this move as a retracement phase of that previous impulse leg, after which we look out for patterns around this area that supports a trend continuation to the downside. Like I said, it could be your double top structure, it could be your head and shoulder pattern, or a rising wedge, or even multiple rejection of that level to join the decline to the downside. So that is the first scenario for selling opportunities after a breakout of the $83 level. The second scenario is if price comes into the $85 mark area, which we identified on the daily time frame, and then multiple rejection happens, we could take a bearish momentum from that point. So this is how we intend to trade the US oil. So like I said, we have how many scenarios here? We have like 4 scenarios we want to be looking at. Don't get confused, it's not that complicated. The first scenario is if we see a breakdown of this channel at the $81.50 area, a retest of structure should give us a confirmation to join the decline to the downside. And if we have a breakout of the $83 level, then a retest is a counter trend opportunity, which will evolve into a retracement phase back into somewhere around the sell window here between the $85 mark and the $88 area, where we will be looking for patterns to join the decline to the downside. So with this information we have here right now, I'm very sure we are well prepared to take advantage of any scenario that comes up here on the US oil during the New York session today. And if you have any question regarding what I've just discussed so far, feel free to drop your inquiries in the comment section, and I will be taking the next 10 to 15 seconds to quickly run through the chats and see if there are any questions in this regard. Okay, so A359, good morning to you. How are you doing today? $132 is asking if US oil is bearish or bullish. Like I've just explained to you right now, we've been on a long-term bearish momentum, and it's advisable to be looking for bearish opportunity at this point. And like I said, I've shared a couple of scenarios with you here where we want to be waiting to see how price is going to play out during the New York session so that we can take advantage of that opportunity. So like I said, if we see a breakdown of the $81.50 area, a retest of structure should give us a confirmation to join a trend continuation to downside. And if we see price climb above the $83 level, then we want to wait for price to come within our sell window between the $85 area and the $88 area to take advantage of a trend continuation to the downside. So that is my explanation on the US oil in summary. Okay, so let's move on to the next pair. And the next pair we deliberated on yesterday was the US tech. And what is happening on the US tech? We saw a significant move to the upside on the US tech yesterday, despite the fact that we were expecting a retest of the $12,000 area. Remember, we had this move yesterday and price came down as far as this, and the first thing I told you was that we should be moving our stop loss to break even, as a retest of this area could give us further confirmation to join the decline to the downside. But that did not happen, as we were stopped out at break even on this trade during the course of yesterday, and we witnessed this massive impulsive move to the upside, which led price right back into the $12,320 area. And since price got into this area, we have been witnessing a consolidation phase around this area, which is likely going to be evolving into a retracement move that will be sending price going to the upside on this one. So let's see from a higher time frame what is actually happening, especially for those who were not part of this session during the early days of the week, so that we can be on the same page before we move on to how we intend to trade the US tech today. So now let's scale up to the daily time frame and let's see what we have on the daily time frame for the US tech. So on the daily time frame, it's very obvious we have a bearish momentum here, and this is evident after connecting the lower highs here to give us this resultant bearish trend line. And remember, we took this move to the downside from here during the in the last couple of weeks. We took about 1,400 pips here, and price has come back into the key level we cited at the $12,000 mark area. Now, the next thing we observe after identifying that bearish trend line is that price has been caught within an ascending channel since the month of June. And you can, if I give you a visual representation of that, you can see how price has consistently found higher highs and higher lows within this channel. We saw price, hold on a second, we saw higher highs, higher lows, and price continued to the upside, though we saw the breakout of the channel, which appears to be a false one, as price came back within the channel, did a retest, and crashed back into the neckline here. You will be asking me that what neckline are you talking about here? If we look at the structure we had within this area, hold on a second, within this area, you can see that we had a reversal pattern here, which looks more like a double bottom structure. We had the first touch here, price came there, found a higher low, and then we saw a breakout of the neckline, retest of that neckline to push price to the upside, and lo and behold, price is right back within that neckline, and there is a likelihood that price could continue to the upside from here, or we could be having a breakdown of this neckline to push price to the downside. So it is the neckline area, the $12,000 area, is a very strong psychological level, and also it's a very sensitive level that we want to be looking out for this week actually. And if we notice what has been happening in the last 4 to 5 days here on the $12,000 level, we can see how this level has consistently been rejected by the buyers, and every attempt by sellers to push price to the downside from that point was met with stiff resistance by the buyers. And you can see with the wicks, we can see here, we can see how this area has been a major buying niche for participants in this market. So on the daily time frame, this is what we can get here. And what are we going to be seeing now? Look at what happened during yesterday's trading session. We saw an engulfing candle taking price out of this area, and there is a likelihood that we could be having a trend continuation right back into the structure. And from a technical standpoint, whenever we see a breakdown or breakout of structure like we have here, we can see how price broke down this ascending channel here. There is a likelihood that price could come back to do a retest of this ascending channel to give us a further confirmation to join a decline to the downside. And if you look at the structure here, where price is likely going to do a retest of this ascending channel, it shares a confluence with the bearish trend line we identified earlier. So it's quite interesting that we're having a confluence around that area. So we want to see how price is going to play out today or in the next couple of days. So what we want to be doing now is to scale down to a much lower time frame so that we can see how we can take advantage of any momentum here. So what I'll be doing is to scale down to the 3 hours time frame here, and let's see what is happening on the 3 hours time frame. Now on the 3 hours time frame, what I'm going to be doing here is to readjust. We no longer have a channel here anymore, so let me readjust this level to somewhere at around the 12,250. Yes, $12,250 level. So let me relabel this point. So we have the $12,250 level, and let's delete this one. We no longer need this anymore. We need this. We don't need this. So we have somewhere here, and if you look at how this 12,250 level has been our participant has been relating with this level in the past, you can see that it's also a major determinant of price action. We can see how price was rejected by the buyers here. We saw the breakdown of that level. We saw a retest. We saw price break above this level again, and this area became a demand zone. Then price broke down one more time and retest the structure to become a selling niche. And right now we can see how price has broken right above this area. And you can see what happened since price broke above the 12,250 level. We see as soon as price got into somewhere around the $12,350 level, we have been witnessing a consolidation phase in the last 12 to 15 hours now. We've seen price caught within a consolidation phase, giving us a clue into a possible indecision in this market. And there is a likelihood that participants are actually waiting for a catalyst that would likely give a signal of where price will likely go in the next couple of days. So now what we want to be doing right now is to acknowledge a 12,250 level area, and let's scale down to a lower time frame to see how price is relating with this level, after which we now look out for trading opportunities against the New York session today. So now, in order to get this, we'll scale down to, let's say, the 15 minutes time frame better. I think it's better to go down to the 15 minutes time frame. We want to see what is happening within this area. So right now, we scale down to the 15 minutes time frame, and like I showed you on the higher time frame, we saw this impulsive move to the upside here, and as soon as price got between the $12,300 area and the $12,320 area, we have seen a consolidation phase here, and it's more or less like a multiple rejection of this area, giving us a clue of a possible quick sell selling situation happening here. What do I mean by quick sell situation? For those who took advantage of this impulsive move to the upside from this area, and as soon as price got here, there is a likelihood that they will want to do some quick sell, take some profit at this point, which could likely transpose into a retracement phase into somewhere within our golden zone area, where we want to be looking forward to a demand zone around here, which would give us a reversal pattern that will be sending price going to the upside. So the next thing I will be doing here on the 15 minutes time frame is to identify this level as our supply niche. Hold on a second, let's identify this level. Where is my rectangle? So we have a selling window here. Okay, let's label this place as supply window, supply zone. So we have a supply zone here. Now, are we going to be seeing a breakdown of this $12,250 area? So if we see a breakdown of this $12,250 area, then what this simply means is that a retest of structure should lead price back into our golden zone area. So now, what is our golden zone area at this point? Now, our golden zone area is the area between the 50 and the 70.6% of the previous impulse leg. So if we bring our Fibonacci retracement tool and run it through the previous impulse leg here, what do we have? We have somewhere around here between the 50 and the 78.6 area, which will be our buy window. So that is the area we'll be looking for buy opportunities on this one. Let's give this a yellow. So we have this like this. So right now we have a buy window around this area. So what we want to be looking forward to is price coming back into the area where price was at in the beginning of the week. Remember, price was within the $12,000 area and the 12,150 area in the beginning of the week. So we want to see price come back into this area, after which we look out for structures that supports a trend continuation to the upside to take advantage of a bullish momentum. And you can see how this $12,000 area has been a major determinant of price action. We can see that it has been a very strong buying niche for participants since the beginning of the month of September. We can see how this level has been a demand niche for participants in this market. So there is a likelihood that the retracement back into the zone or even right above the zone will be a buying potential for us in the New York session today. So let's be patient and see how price plays out on this one. So that is the first scenario we are looking at for the US tech against the New York session today. And then the second scenario we want to be looking at is this. Remember, we have the supply zone right around the $12,300 area, which has been resisted in the past. We can see how this level has been resisted in the past. So if at any point in time during the New York session we witness a breakout of the structure, that is, price breaks out of the supply zone, that is taking out all the selling positions around this area, then that could be a signal that a bullish continuation is happening. Hence, this consolidation phase could turn out to be a trend continuation pattern. So if we see price break out of the supply zone, remember, we don't want to get too excited at the sight of a signal. We want to wait for price action to give us further confirmation, which is likely going to come in the form of a retest of the structure. Then we look out for patterns on lower time frame to join the rally to the upside. And if this rally happens, what I want to be suggesting is that our take profit target should be right within the $12,800 area and the $12,500 area. It's quite a huge zone anyways. And the reason why that is simply because of the support level of the ascending channel that was broken. Let me show you. Remember, we had the support of this ascending channel that was broken during the early days of this month. It was broken to the downside, and whenever we sight a breakdown or breakout of structure like this, we expect price to come back and do a retest of that structure. And the retest also shares a confluence with the bearish trend line we identified on the higher time frame. So if you look at the structure here, we can say that somewhere around the 12,600 area and the 12,850 area seems most appropriate for the take profit target zone to be, which will be dovetailing to about, let me see, if we're taking it from above the 12,300 area, will be giving us a minimum of say 200 to a maximum of about 500 pips to catch here. And if we are taking it right from the buy zone we identify here, then that will give us quite a huge one, around between 450 to about 650 pips to catch on this one. So let's see how price action plays out here. So that's that on the US tech anyways, nothing more to say here. So let's see what happens during the New York session today. And I hope you will be on standby to catch that move when it finally happens. If you have any questions whatsoever regarding what I've just discussed so far, feel free to drop it in the comment section, and I will try to inculcate it into, I will try to be of help in that regard. So let's move on to the next pair. The next pair we are looking at is the, oh my goodness, I have 15 more minutes left. Let's see if we can finish this before time. So we have the USD JPY, and the USD JPY moved as expected yesterday. We saw Hold on a second. This is the USD JPY. Remember what I was sharing with you yesterday when I told you that we took some profit on the USD JPY yesterday. We took this bullish momentum to the upside. And one thing I told you at the close of the session yesterday, that there is a likelihood that price could come back to do a retest of the bullish trend line we identified on the higher time frame. Remember, we had this bullish trend on the higher time frame, and I said there is a likelihood that price could come back to do a retest of that bullish trend line with the intention of a trend continuation to the upside. Now, I said the only way we can know is if we sight a reversal pattern around this area here. Remember, we were around this point. This candle was still running yesterday when we closed the session, and I said if we have a reversal pattern here, then we could be taking advantage of that bearish move to the downside. And so what happened on the lower time frame gave me a confirmation to join this trade, and I hope you did. And if you had done that, kudos to you for identifying that. Look at what happened here on the 15 minutes time frame. We saw something like a double top structure. Price came to as far as the 144.9 $145 area, and we saw the first touch of this level at the 144.650, which appears to be the neckline of the structure. Then price came back into the 144.960, which didn't go past the previous high, giving us a clue into a possible selling momentum at this point. So what I did at this point was just to place my entry point right below this point, and we took advantage of the smooth price did the retest of structure, and price continued to the downside from that neckline. And right now price is in about, we are in about over 100 pips in profit at this point in time. So if you are taking advantage of that move, kudos to you for identifying that. And I have my take profit target sitting right around the 142 Japanese yen area, hoping that price will come back into the bullish trend line we identified on the daily time frame to take advantage of a trend continuation to the upside. So that is what our scenario is as at yesterday. And the first thing I will be saying here, if you took advantage of this move, kindly move your stop loss to break even, or lock in some profit to protect your position against any sudden pullback that could happen from this point. Remember, this is a counter trend opportunity, and we don't want to get caught up within sudden momentum shift that is very likely to happen on a very strong bullish momentum that you can see here. So now, for the sake of those who missed out on this view that we shared, let's quickly run through the higher time frame to see how we got to this point, and let's make our decision for today. So on the higher time frame, the first thing we observe on the higher time frame is that price has been on a very strong bullish momentum. We can see what happened since the beginning of the year, and we were able to identify this bullish trend line after connecting the series of higher lows here. We saw how price has consistently respected this bullish trend line, and since price tested this bullish trend line in the month of August, we are yet to see price come back into the key level area, which also shares a confluence with the neckline. Now, what is the neckline that we are talking about here? If we zoom into the structure we have here, hold on a second, and look at what happened in the beginning of the month of August, we can see that after this impulsive move that took price right back into the bullish trend line here, we saw structures that evolved into a double bottom structure, which from a technical standpoint is a very strong reversal pattern. Then what happened afterwards, we saw a breakout of the neckline area at the 135 Japanese yen area, and since then price is yet to come back to do a retest of the neckline. So right now I'm actually expecting that price was likely going to come as far as this, but I'm not sure if that is going to happen. But let's see. Now when we scale down to the 1 hour time frame, the first thing we did on the 1 hour time frame was to identify this bullish trend line that has been respected since the beginning of last week trading session. Last week, yes, this trend line has been holding price action in the last 2 weeks, and you can see how it has consistently found higher lows right from that bullish trend line. So I was able to identify this bullish trend line, and we saw this impulsive move that started this week, and I'm hoping that price will come back to either respect this bullish trend line, that is one scenario, or break it down, or break down that bullish trend line where a retest will send price crashing back into the neckline we identified on the daily time frame, which also shares a confluence with the bullish trend line we identified on the daily time frame. So that is why we're having our take profit target at around the 140 Japanese yen area, which is somewhere around the bullish trend line we identified here that has been holding price action in the last 2 weeks. And if we now see a breakdown of that bullish trend line and a retest, then we could be adding more position to the USD JPY. So now with this information we have here right now, and like I said, for those who took advantage of that move yesterday, we want to move our stop loss to break even first. And for those who missed that opportunity, is there any opportunity? Is the market going to give us another opportunity to trade the USD JPY on a bearish momentum? Well, let's look at the current structure we have here. So in the last 24 hours now, we have seen this move. Price has dropped from 145 Japanese yen area right back into the 143.650 area. And what have we had here? We've seen something like a consolidation phase, which appears to give a clue into the indecision that has gripped the market right now. So what we want to do is to identify the structure, and the only way we can do that to get a specific point is to bring out our line chart. And when we do that, we have somewhere around the 143.650 area. Let's see, somewhere around here as a structure we want to be looking at. So let me give you, let's do this, and then we have the 143, okay, it's 143.700. So let's label this area for the sake of clarity. So we have 143.700. I think this is too big. Let's make it a little bit smaller. And then we have, yeah, so we have something like this. So if you had not been part of this bearish momentum we took advantage of yesterday, I think we still have another opportunity to join a decline from this point. So now how do we do that? What we want to be doing is to look out for signals. We can see price break down this 143.700 level to give us that signal to join the decline. So if we have a retest of structure, price comes into the bullish trend line here. Let's see how price is going to relate with this level. So this is the bullish trend line we identified on the 1 hour time frame. So if price comes into this level, let's see how price is going to relate with that level. Are we going to see multiple rejections from this level that will send price going to the upside, or are we going to be seeing a breakdown of the structure retest to send price going to the bullish trend line we identified on the daily time frame? So right now, take profit targets to remain around the 142. So if price continues to the downside from here, I'm going to be moving my stop loss right above the 143.700 to lock in some more profits on this one. So if price comes into the 142 area here, that is on this bullish trend line, and I cite a reversal pattern, probably a double bottom structure here, then a breakout retest of structure on lower time frame will give me a confirmation to join the rally to the upside. And if we see a breakdown of this level, that is price breaks down, retest, then we want to be joining the decline to the downside on this one. So that's how we intend to trade the USD JPY during the New York session today. So if you have questions, feel free to drop a word or two in the comment section so that we can move on to the next pair. So the next pair we are looking at is the GBP card. I want to try as much as possible to cover all the pairs we did yesterday before the time lapse. So don't mind me if I'm too fast. I'll try to slow down a little bit. Okay, so we went on to look at the JBP card, where we took advantage of a bullish momentum during the beginning of the week. Remember, we took advantage of this move on Monday after citing this double bottom structure here. We saw the double bottom structure, a breakout retest of the structure. We took advantage of this move to the upside before we were stopped out at where we locked our profit, and price continued to find lower lows and lower highs here. Then we took advantage of the breakdown of this 151.750 retest of that structure, took this move to the downside, and we were around this point yesterday, somewhere around here, yesterday, where I told you that for us to join the bearish momentum on the GBP card, we need to be very, very patient. Hold on a second. So like I said, we were around this point yesterday, and I told you that if you had missed this move from this point to this area, then we want to be patient to wait for the market to give us another opportunity to join the decline. So for those who took advantage of this move yesterday to this area, I told you to move your stop loss to break even. And for those who are yet to be in that trade yesterday, I told you to wait for price to come back into the 1.51400 area to take advantage of a trend continuation to the downside. And lo and behold, what happened? We saw how price rejected this area during the New York session yesterday multiple times. In fact, we had like 1, 2, 3, 4, 5, 6 rejections here. And then we saw the price move to the downside on this one. So right now, price is back within the entry zone. That is somewhere around here. So there is still a likelihood that we could be joining a decline from this point. So personally, before the start of the session, I already moved my stop loss to break even on this one. I think I will have been stopped out by now, as price has come back to our entry point. And one thing we observe here is this, that might likely change any bearish momentum on this one. Now we saw this move to the downside here. Price came back into the 1.51400 area, and what happened? Price came back to 1.50760. That is a higher low. So price was unable to go below the previous low, giving us a clue of a possible bullish momentum unfolding here. So in the New York session today, if we have an outright breakout of the 1.51400 area, then that is likely going to be a bullish signal. And what do we want to be doing when we sight the signal? We want to wait and be patient for price to come back and do a retest of structure, after which we anticipate a bullish entry on the GBP card. However, if price does not go right above the 1.5140 level and price continue to reject this level with multiple rejection, then a breakout retest of structure should give us a signal to join the decline to the downside on the GBP card. So we have a very simple setup to play around with here on the GBP card. Let's see how price action runs during the New York session today or in the next couple of hours. Then we can make that decision. So we have two scenarios: a breakout of the 1.51400 area with a retest of structure should give us a confirmation to join a bullish momentum on the GBP card. So let's move on to the USD CHF. So on the USD CHF, what do we have on the USD CHF? Price has moved significantly well in our favor. Now remember, we were able to identify this bullish trend line on the 1 hour time frame on Monday, and we cited this breakdown of this bullish trend line as a signal of a bearish momentum, and we saw price break down. Then price came back to this area at around the 0.98700 area with multiple rejection of that bullish trend line. And then we were around this point yesterday where I told you it's appropriate that you could be taking advantage of a selling momentum right around the 0.98500 area. And if you took that move as I have suggested, you will be in a massive profit at this point in time. And if we look at it right now, we are in about 120 pips. I have my first take profit target here at I think I will have it. My take profit target will have been triggered, and I will have been in 125 pips in profit on this one. That's the first scenario. Then the second take profit target is at 0.969800 area. So it's a very huge profit for us on the USD CHF. Price has moved significantly well in our favor, and so let's see what happens. So for this one, I will just pass this straight for now. We're already close to our take profit target on this one, so let's see what happens in the next 24 hours to now make a new decision on the USD CHF. So we went on to talk about the silver yesterday and what is happening on the silver. Silver continued to climb to the upside on this one. We actually had a selling window around this area where we were looking forward to price coming into that area with a reversal pattern to give us a signal of a selling momentum. But lo and behold, that did not happen. We didn't see any reversal pattern within this area. Let me show you what I was talking about. I think we were around this area yesterday when I said we should wait for price to come within this area, give us a double top structure to join the decline, but that did not happen. And I made mention of if price breaks above the $18.50 area, something like this, and retest, then we should join the rally to the upside. So if you had joined that rally to the upside, kudos to you for identifying that move, as price is right now with about how many pips in profit, about 160 pips in profit at this point in time. So the first thing I'll be telling you to do right now is to lock in some profit. Sorry, move your stop loss to break even at this point, somewhere around the 18.50 level seems most appropriate to move your stop loss to, and let's see how price action is going to play out in the next 24 hours on this one. So if price moves significantly well, there is still a likelihood that price is still going to come back into the $18.50 level to take advantage of a trend continuation to the upside. So if you had missed that move, there is still a very strong possibility of price coming back into the $18.50 area to take advantage of a trend continuation to the upside from there. So that is that on the XAG USD. If you have questions, feel free to drop it in the comment section and let's see if I can be of help. That is that. So let's quickly, that's the last pair we're going to be doing today. So let's do a recap for especially for those who missed out from the beginning of the session. Okay, Paisan, good morning to you. How are you? 545, good morning. Hi Max, how are you? I guess you're coming in late today. Trust you're doing well. Ramona 85, good morning. How are you? 105, you're welcome. All right. Babel 1R. Okay. Hello, good morning to you. All right, let's run through what we've done so far today and let's call it a day. So the first pair we deliberated on today is the US oil. And what did we cite on the US oil? What did we see on the US oil? Hold on a second. Let's hold on a second. I want to sort something out here before okay. So on the US oil, we're still expecting a selling momentum here on the US oil. And how is that? So let's quickly look at what the expectations are. So right now, we said we are within a channel between the $81.50 and the $83 area. So what I said is that if we see an outright breakdown of the $81.50 area, that's just a signal that there is a strong bearish momentum coming in. So we want to wait for price to give us a confirmation in the form of a retest of the 81 between the $81.50 area and the $83 area, which also shares a confluence with the bearish trend line we identify on the 4 hours time frame. Remember, so if we see price come back into somewhere around this area, then a reversal pattern or structures on lower time frame supporting the trend continuation will be an opportunity for us to join the decline. That is the first scenario. And then the second scenario is that if we see an outright breakout of the $83 level, that is price breaks out of this channel, which also breaks out of the bearish trend line here, then a retest of this $83 level happen or somewhere around the structure here, and price continues to the upside, I want to be seeing this as a retracement phase. And like I said, if you are a counter trend trader or you're comfortable taking short-term trade, you will take advantage of that opportunity when we see a retest of structure. However, if you are a long-term trader, you want to wait for price to come into the $85 level, which is a very strong significant level we identified on the daily time frame. Remember, I'll come within this area, this channel, the resistance level of this channel. So we were able to identify a sell window here, and we are looking forward to reversal patterns within this area to join the decline to the downside here on the US oil. Then we went on to talk about the US tech, where we cited this impulsive move to the upside. And we also cited this supply zone around the $12,300 area. And we said there is a likelihood that this zone is going to push price right below the 12,250. And if we have that move to the downside, breakdown retest of structure is likely going to send price back into the buy zone, which we identified between the $12,000 area and the 12,100 area, where we want to be looking out for buying opportunities like a reversal pattern to join the rally to the upside. And remember, we have our take profit target right between the 12,500 area and the 12,800 area. It's a very huge one, and this is as a result of the breakdown of this ascendant channel we identified on the higher time frame. So we identified this ascendant channel on the higher time frame that was broken, and there is a likelihood that price is coming back to do a retest of that structure. So we have around that area as our take profit target. That is the first scenario. And then the second scenario is if price does not break down this 12,250 area and price continues to the upside, that is breaking out of the supply zone we identified at the $12,300 area. If a breakout of this level happen, then we want to see this as a signal of a strong bullish momentum, and we want to wait for price to come back, give us a retest of structure to give us a confirmation to join the rally to the upside. So that is that on the US tech. Then we went on to talk about the USD JPY, where we are in a very strong, in a profitable trade at this point, as we still expect price to continue to roll down into the $142 area, which also shares a confluence with the bullish trend line we identified on the 1 hour time frame. So what I said here, the first thing I said for those who took advantage of this move is that we should be moving our stop loss to break even at this point to protect our position or lock in some profit, whichever suits you. Then what we want to be doing next is to, for those who have missed out on this trade, the next thing you want to be doing is to wait for price to break down the $143 level to give you a signal to join the rally, the decline to the downside on this one. And one thing I said about the $142, 42 Japanese yen area is that we want to see how price is going to relate with this level. If we have a scenario where price rejects this area, evolving into a reversal pattern or multiple rejection of this level, then we want to be joining a rally to the upside. But if a breakdown of that bullish trend line happens, we don't want to get too excited. We will wait for price to give us a confirmation in the form of a retest of structure before we join the decline to the downside. So that's that on the USD JPY. Then we went on to talk about the GBP card, where we took a selling opportunity here, and with the scenario we have here right now, I'm already stopped out in the trade. And if you are still in this trade, please stay out of this trade, as we want to see price coming right below the 1.51400 area for us to be comfortable with the selling momentum. So we want to see price right below the 1.51400 area to join a decline to the downside. However, if we see at any point during the New York session sight a breakout of the 1.51400 level, that is, price breaks out of the 1.51400 level, then that should be seen as a signal of a bullish momentum. Then if that happens, a retest of structure should give us a confirmation to join the rally to the upside, with the take profit target sitting at around the 1.53 and the 1.54 area. And the reason why that is because of this bearish trend line. We want to see how price is going to relate with that level. Then we went on to talk about the USD CHF, where we are in a very strong, massive profit on this one, as price has moved right into our take profit target, the initial take profit target on this one, and we are in about 125 pips in profit on the USD CHF. So this has gone too far, so there is no, I don't think there's another second opportunity here on this one. So let's pass this trade for today. We'll come back here tomorrow to see what happened in the last 24 hours to be able to decide where we are going to be going henceforth. Now we close the day with the with the silver, and silver has broken out of our key level at the $18.50 area. And I told those who took advantage of this move to move their stop loss to break even at this point, somewhere around the 18.50 cent there, $18.50 level, to lock in their position against any sudden momentum to the downside. So if you had done that, well done. Now what we want to be doing here is this: for those who had missed out on this opportunity, I told you how it is still likely that price is going to come back into this area to give us another opportunity to join the rally to the upside. So this is our scenario so far, and let's see how price action plays out on the silver as well. So we were able to look through all the pairs that we deliberated on yesterday, though I rushed through the last part of those pairs. I hope you don't mind. Sorry about that. I think we took so much time on the US oil and the US tech, which made us to have short time for the subsequent pairs. So thank you very much for being around. I really appreciate every moment I shared with you guys, and I will look forward to the New York session. We were able to cover the old six to seven pairs that we treated yesterday, and we have opportunities lined up for us. And I hope that we are well prepared with this information to be able to take advantage of whatever potential opportunity that arises during the New York session. And remember, we don't want to get too excited when we sight our signals. That is, when we see engulfing candles taking us right out of our structure, we need to be calmed. We need to be calm and wait for price action to give us a confirmation in the form of a retest of that structure before we join that momentum. And if price does not come to give us that retest of structure for confirmation sake, then we pass that trade. It's okay. We still have tons and tons of opportunities in the market to take advantage of. So on this note, I wish you best of luck during the New York session. I hope to see you tomorrow, same time, 10 a.m. UTC, 11 a.m. West African time, same place, Extreme Speed Life app. Call your friends and family, colleagues and friends to join us. Download the Extreme Speed Life so that they can be part of this family as we get ourselves prepared for the New York session tomorrow. So once again, thank you very much and do have a wonderful day. Bye bye.